In Spain, a savings bank is a financial institution which specializes in accepting savings deposits and granting loans. Banks in Spain fall into two categories. Privately owned banks are bancos, and those which are government-owned are cajas, which literally translated means pay office or pay desk. Their original aim was to create the habit of thrift amongst the very poor, but they have evolved to compete with and rival commercial banks. The trade association is the Spanish Confederation of Savings Banks. Performance in the first half of the 20th century. Between 1870 and 1900, the financial strength of savings banks increased significantly. During this period, the pawn and emergency loan operations of the Mount of Piety were unable to absorb all deposits made at the savings bank. Unlike savings banks in other European countries, Spanish savings banks were not required to purchase government debt with excess resources. Instead, savings banks began making short-term advances and issuing mortgages directly to the public. Initially, they issued short-term loans using public and industrial goods in stock as collateral. Between 1862 and 1867, 40% of the amount of the loans was granted with the clothing securities, and the remaining 60% was secured by stock. Diversification continued, and by the outbreak of World War I, Spanish savings banks were readily issuing mortgages directly to retail customers. The Mortgage Act of 4 June 1908 contributed to the development of this phenomenon, as it pioneered exemption from having to pay different forms of capital gains and corporations tax for mortgages issued by the Mount of Piety. Most early established savings banks had located in the biggest urban centers, and grew in financial strength through retained surpluses. By the turn of the century, most assets were held in the savings banks located in seaports and industrial cities. Between 1900 and 1925, the number of Spanish savings banks tripled to 150 banks. Although no major change in regulation policy of the bank's business portfolio had taken place, between 1900 and 1914, the Spanish banking sector experienced a sharp increase in its levels of activity. Some banks also observed increased efficiency and enhanced competitiveness. Assets of private commercial banks grew significantly due to both the repatriation of capital due to the colonial crisis and World War I, in which Spain remained neutral. These circumstances favored the geographical expansion of the regional private commercial banks based in Madrid and the Basque Country throughout Spain. In 1921, the first banking law was enacted, and that year the Consejo Superior Bancario, or CSB, was established by private commercial banks. The role of the CSB was to coordinate the actions of private commercial banks as their economic power became more important. By the beginning of the Spanish Civil War, private commercial banks dominated financial markets, and were organized through the cartel that built around the Consejo Superior Bancario and supervised by the Ministry of Employment, Commerce and Industry. During the 1920s, assets in savings banks started to abandon the charitable nature and gradually turned into broader financial intermediation institutions. Growth was limited because competitive pressure to find new opportunities within the private commercial banking sector resulted in a policy of expansion of the geographic scope of retail branches, networks, and diversification of sources of business. These strategies brought the competitive challenge of private commercial banks to markets being serviced by savings banks. Individual savings banks enhanced the profile within the local communities as greater asset size allowed them to increase the funding of social, welfare and agricultural projects. deposits. However, a new approach to how people saved and to the working environment of savings banks came about as a result of legislation enacted in 1926, 1929, and 1933 during the dictatorship of General Primo de Rivera, a period in which the economic policy was marked by an authoritarian corporatism, and the Spanish Republic brought. These regulatory changes brought to an end the savings banks' charitable nature. They also turned the profits into the main source of funds. Regulatory innovations put to an end the broad discretion that the directors of savings banks previously had and established specific and detailed guidelines whose use grew during the dictatorship of General Francisco Franco. Regulatory burden. The Franco regime reaffirmed the preeminence of private commercial banks within the Spanish financial system and introduced regulation that handicapped traditional savings banks. The supervision of the savings banks was transferred from the Ministry of Interior to the Bank of Spain. The first episode of regulatory change for the savings banks saw increased regulation, and the overwhelming majority of new savings banks that were established between 1939 and 1977 were set up by local and central governments. The Franco regime continued implementing a practice developed during the 1920s called the principle of territoriality, meaning that the business of each savings bank was restricted to its home province. This principle remained an informal arrangement until it was enacted into law in 1964. At the same time, the increasing asset base of the savings banks prompted the Finance Ministry to start regulating the sources and applications of the funds. As a result, the Finance Ministry directed a growing proportion of the assets of savings banks to finance public debentures and private banks' short-term liabilities, with the added result that the policy significantly reduced funds available for agricultural projects and other traditional lending activities. The second episode of regulatory change for the savings banks dates to the last stage of the Franco regime, when attempts were made to ease the regulatory burden on Spanish savings banks. Nonetheless, until 1974 the savings banks remained outside the Spanish clearinghouse system and had access to only a restricted business portfolio. However, under the Fuentes-Quintana reform, the competitive environments for savings and private banks started to converge. The reform gave savings banks strong incentives to modernize their infrastructure and develop new skills. In 1977, for example, the Bank of Spain authorized the first automated telemachine for the savings banks, and by 1996, the combined network had 14,169 machines, the biggest network in Spain and the third largest in the world. Collapse of the cajas. In the aftermath of the global financial crisis, the Spanish real estate market collapsed, taking Spain into its very own financial crisis. Out of the 45 cajas in existence at the start of the crisis in 2007, only 2 survived in their initial form. The rest were either taken over by other banks or by the government or forced to merge and taken over by the government, wiping out existing equity holders. However, the former cajas continue to exist, in the form of banking foundations, or ordinary foundations, that have seen their actions restricted to social and cultural incentives and sponsoring, and most of the financial means converted into shareholdings into the subsequent caja bancos. Those banks, in turn, have been given memberships into the renewed SICA, thus reinforcing its influence within the Spanish banking sector.